All right. Good morning, good afternoon, good evening, everybody. We are looking at April the 19th. We are near the high of the day. Let's go take a peek at the daily candle, see what's going on here. So, according to the daily candle, we are green. We have a lower high, we have a lower low. That's probably due to what happened in the last 16 hours between Iran and the conflict that they're having over there. And so that, propelled the euro lower, but it's recovered since then. We're thinking maybe higher high from here, right? So let's go take a peek at an hourly chart. So this is the event from overnight, and the market's been going up the ladder ever since. And if I look at this on the 5-minute chart, I'm inclined to think that we're gonna maybe test these rungs, right? So if we come down to this, do we want to buy? Well, from what I'm looking at here, it would seem to be the right call. Probably buy this and see if we can get back up to this rung, right? Buy this and see if we can get back up to this rung, right? That's what I've been doing, right? So I have a few positions already opened, and I'm gonna continue to play the upside. And if you remember yesterday, on our top-down analysis, yesterday we had highlighted an outside range right there, and we had also picked off this right here as an outside range. And the market gave us pretty close to it, right? So we have this to contend with, and the upside target, we have to assume boxes on top, right? So let's see how much have we done so far. 65. An average day is already 65, right? So how much more are we going to do? Right? How much more on top of this is the market going to do? Okay, so let's go back to our 5 minutes and then watch and see if it climbs up the ladder or it climbs down the ladder. I've already made the assumption that it's trying to go up maybe one or two more rungs, at which point I want to become a seller. All right, my target to begin selling is somewhere near '07, right? So add 3 boxes to this. So add 27 or 28 pips to this. Right here, we're at 704, right? So in this neighborhood up here, I want to become a seller, right? So let's put a red line there so it sticks out. Whoops. 704. Right here. There we go. And so now I know what to do when we get up here. And with my mind's eye, I'm just gonna replicate this a couple more times. All right, so now we have a target, we have a plan of action on the way down, and we understand what the market is capable of, right? It moves boxes upon boxes, right? So is it coming here? Or is it gonna try and go up there somewhere? Right? This is a measuring device, and we're trying to figure out where does it start to measure from? Is it measuring from that swing right here? And if it's measuring from that swing, it has an hour, it has 60 bars to get to here in this opposite corner, right? If we assume this is a swing low right there, and we put the box on that swing low and we measure from here, the market went up 2 boxes from that swing low. It retraced 1.5 box. And so if we assume this is now a new low, a higher low, we can take it from here. Right? It's an assumption. If the assumption is wrong, you'll break that box, you'll come into this box, and you'll understand where you need to be buying more. All right, so in 5 minutes or so, we've gone from the top all the way down to the bottom time frame where we operate. In this time frame, we're expecting pullbacks, we're expecting pushes off of support, off of resistance. And that's where the money comes from, right? These little tiny trades are repeated over and over and over and over. Right? Even the stuff from yesterday, or I did this at 5:30 this morning. This was at 4 o'clock this morning. These are the trades from yesterday and last night. For a period of time, for about 15-20 minutes during that conflict overnight, I was hedged for a few minutes, but that was temporary. That's the idea, keeping it temporary. At the same time that this stuff was going down in the room yesterday, or as the events were happening, I posted what was happening and what I was doing at the same time. Here's that outside range that we were just speaking of. It fulfilled. And so, yeah, this is, that's kind of what we do. We keep our finger on the pulse. And if something comes down, on the opposite side of the world that impacts your trade, you have to deal with it. And, the phone is not to open trades, but it's really to close trades. And so your mobile is an emergency exit. All right, let's see if we can make a few more profitable trades here and then call it a profitable week. Be done. Leave the casino. Go celebrate. Reward yourself for your successes. All right. So up here and above, we want to be selling. Right? So as we approach up here, I may become a seller a little bit early. Right? Anticipate this move. I'd rather be early than late, as you can obviously see, right? I was early on the rise. I was early on the rise. I was early on the rise. Right? Here I am on the red candle placing a trade, and hopefully I'll be early on the next leg up. Let's place one more. There we go. I do have a few trades already open as I was trading with someone else in the last hour. But nonetheless, as a group, we're starting effective immediately. All right, so again, coming in on schedule allows me to determine where I am in relation to an average day, and it allows me to decide if I'm trying to extend on the current move or contract, come back from the current extremes. Right, so I'm either making a higher high or I'm retracing all the way across and I'm trying to make a lower low. Right, which is what. And so every day that assessment is repeated and you act upon the decision. You live by the consequences. All right, let's see what comes next. Right, ultimately, let's repeat the red line thing here. 704. And that looks to be about one more box. Oh, one more box is 700 exactly. We'll change that to red, just so I can have a clue as to where it is. Here's our first winner of the day, folks. First win on a Friday. Feels awesome. Better than orange juice. All right, repeat that trade right here. And one more right there. That's trade number 2. Right, so that's trade number 2 for us. Maybe trade number 3 if it pushes a little bit lower into these wicks. Oh, I know what's missing. The squawk box is on mute. That's why it's been so quiet. Very little on the calendar today too, right? We have almost nothing to be worried about. Nothing to interfere with our trading session. So let's just go, go, go and be done with it. And this is just for reference. These could be way, way off. I'm just using my mind's eye to estimate on the way up. And you can clearly see there are a few missing along the way, and some are way, way off. Stuff like that. All right. Do we want to take a trade here? I would imagine so. We have to consider, right? Remember, we fulfilled the ADR, the average daily range, right? So the expectation of higher high diminishes as the time goes by, right? And about 10 minutes ago, we just went through the options expiry. And so, that influx of money coming through is kind of run its course, right? So the next event to look out for is the bear pullback or bull pullback in this case. Right? That's something we take part in at around the 8:30 or the bottom of the hour, right? So maybe in the bottom of the hour, we'll have made our way in this area here, and we will have bought more in the next 20 minutes or so. Right? The idea is to participate in this bull market pullback so that we can take part in the next leg that is expected to be this. Right? So it's the circadian nature of the market that we're trying to exploit. And lo and behold, the boxes line up beautifully with previous support / resistance. All right, so we're only building a position, looking to exploit the next move, right? So if the market is doing this in a bullish environment, the next move is very likely something like that. Anything can happen between here and there, and like I've mentioned before, I'm just some dude on the internet. This is not financial advice. I'm just showing you how I do it. So this is at your own risk. All right. Do this in a demo account if you don't know what you're doing. Sorry.
And so we are surely expecting comments from Bank of England's Breeden and Ramsden.
If you're trading the pound, be careful. In our case, we're trading the euro, and there's, trillions of them out there. So it's not as volatile as the pound is. The pound is like a rabbit, where the euro is a turtle. They'll cover the same distance in a very different amount of time. All right, let's see if we can get our buys down here. That would open us up to 4 clicks down here. Right, so where would plan A, B, and C, D? Right, this might be a level to participate in. This might be a level to take part in. The bottom of the box. And if we look inside here, there might be a little something, something. Right around here. And then I'll just remove this because it's delusional. And then we'll see what happens. Gold is refusing to go down, which makes sense after what's been happening in the Middle East. So oil went on a flyer yesterday also when the event unfolded. So nice to
And Bank of
see.
England releases the text for Ramsden. Says the UK is less of an outlier on inflation. Says there are likely to be bumps in the disinflation process from one month to the next.
It's nice to see we've avoided World War III until further notice, at least. So, as a trader, you keep your finger on the pulse, especially for what you're involved in. But in general, with what could disrupt your plan, and then the alternative, plan B, plan C, plan D. Ultimately, you should have a plan for the worst case scenario, right? In my world, that's the ejection seat, right? So if I happen to step away for 3 minutes and something weird comes along and destroys, my trades, it doesn't destroy the account. This will hurt. It will hurt the ego, but it won't destroy the account. I'll have something to work with tomorrow. Right? Ejecting is, the ultimate sacrifice. Until I'm forced to eject, my job is to manage risk and engineer an exit that is less painful than the stop loss. Engineering the exit is what I'm doing here, right? I'm spreading my risk, controlling where that white dotted line is. And so if I take a trade right here, the white line moves. It moves in my favor, and so now it's only 4 pips away. It was 4 pips away. Right? So if I get into this area here, it entitles me to spend money and move that line closer to where it needs to be. Right around here. Right? And so now I'm saving 4 clicks for this bottom box. Right? And the goal of all of this is to retest the high. And maybe go higher so we can sell. It's about 10 more minutes to exploit this bull pullback. I want to get, there you go, just want to move this off to the side like that. We're not looking for big move. We're looking for standard on top of standard on top of standard. The secret is the word standard. And what we learn to do is react to something that is not so standard. I already have a trade at the bottom of the box, so now I have to wait for this right here, specifically this one, if I can. Patience, patience.
Yet to be determined. We do have a live video link on the calendar for anybody interested.
That was for the BOE. All right, come on. Let's recycle some trades here and then be done with the day. Those of you following along this week, we've had a successful day pretty much every day. Depending on where and when you reside and where and when you trade, you may have had some drawdown, but it's to be expected and manageable. So I think we fared okay. We'll try it again next week. As long as we can close this stuff out, today will be a success and we can enjoy the weekend. Come on. I want to recycle this trade here. I need to see an opportunity. Like this. Buy cheap, right? We're thrifty. Sometimes we buy expensive. There's times when I buy the high because I'm thinking it's going higher, like I did here. Right? When I bought this thinking it was going higher, it's probably because I was looking left and I was at support/resistance. Red candle. I think I have the 4 already. 1, 2, 3. Yeah, I have too many, so I can't. I've already recycled it. Sorry, didn't mean to whistle. I forget the microphone's turned on sometimes. I'm not used to trading in a community, trading in front of a crowd. Come on. Those of you following along, take a trade right here, right now, if you can afford it. I've already got too many from my actions earlier, so I have to pace myself out. Right, again, if it does move up and it starts to make higher highs like we expect it to, it doesn't call for the moon, right? It's just calling for standard deviations, eventually leading to a slowdown, a slowing momentum environment, which tends to lead to the pullback, right? So we would expect a wick, so to speak, on the daily candle. And so we're trying to find where the top of that wick
US stock index
is.
extending their fall here. That's the Nasdaq down by 1% now.
Whoa. Nasdaq is
In 10 minutes time now at the bottom of the hour. We expect comments from Fed Scoresby, who participates in a moderated Q&A at the SABEW annual conference. We do have the live video link available attached to the calendar for anybody interested.
And very quickly, like we do every day, taking a peek at the dollar index, we're approaching support. Right, so therefore our euro should be approaching resistance. We're thinking it's in the 700 area for our euro. Right, so let's keep that in mind. Oh my goodness, look at that. What's going on? What a problem. Do we recycle or not? I think so. There's one. I don't want to borrow from Peter to pay Paul, and I already had too many. And so I want to, keep it to something that I can control. Come on, let's close a couple more. All right, so since we started our group session, our trades have all closed. All right, everybody following along have winners. Right, consider yourself lucky and then think about leaving the casino. So I'm just waiting to see if I can put that trade back on. There we go. I need red. All right, so people are now assuming double top, all sorts of stuff is going through people's mind here and there. And we are looking at up here, right? Slightly higher high. All right, so now we've broken into the upper box, having closed everything in the first one. So we are back in box number one again. Right, we finished box number one and we're back in box number one. So now you're free to reset your 4 clicks and do it all over again. All right, so if we see a red candle, a little bit of a pullback here.
So shortly expecting comments from Fed Scoresby. Again, the live video
right
is
here.
pinned to their entry on the calendar, if anyone's interested.
So I took a trade on that wick. If it pushes back lower, I'll take more. Right, and ultimately we're thinking it's trying to go up. Let's remove some of this junk. We're trying to go up there, right? Anything can happen. Some dude on the internet's making money, man.
Seeing a text release from Fed Goolsby here. It says it makes sense to wait. Makes sense to wait to get more clarity before moving. Progress on U.S. inflation has stalled, Fed Goolsby says, and not all data suggests the labour market is overheating. You need to determine if strong GDP and jobs numbers are a sign of overheating that is driven up by inflation or driven up inflation. It says sees more space for progress on services inflation from labour supply increases. Persistently high housing inflation is the main short-run problem, but Goolsby is still hopeful for a return to improvement on inflation in the months ahead. So the proper Fed policy going forward will depend on the data. Fed's current restrictive monetary policy is appropriate.
And there you have it, folks. So we are recycling trades. I love being in a waste management business. Let's get back to the low here and get me back in there. Who's feeling like a winner? Right, so this is when people will get compelled into buying the high, expecting it to go to the moon, not realizing that it's maybe testing what's already here and not planning to go to the moon, right? So we don't want to get stuck holding the bag with a bunch of longs up here. Right? So this is why cautious and aware, like you have to be cautious of your surroundings and keep your head on the swivel. You have to be willing to bounce out of here at a moment's notice, right? So the target is up here and you may be asked to start earlier, right? Maybe the target is here. Maybe the target is here, right? So keep your eyes open, especially looking to the left, right? And try and see if we're breaking this inside swing. The inside of the swing is where we stopped. The inside of the swing here is where we stop. But if you notice, we could go all the way up here, right? Inside here, we can go even a little bit higher, and that would be the outside of the swing. Right? So understand your surrounding, understand what's happening on the left. And that's what's driving this price action here. Buy. 1, 2, 3. I just put 3 on here. I have one more, and I'll put it there. They must have heard me. My friend James probably says they're listening to me right now. Hey, James. They're always on. The ears are always on. They're on to me for sure. At this point, they probably don't like me giving away all the secrets. Boom, boom, right here. Buy. Trade number 4. So let's readjust the box. Was this a high? If this is a temporary high, it's trying to get to here. Right there. Take that trade if you can. Right, and now we are boxes away from the high. We're testing the inside swing. We've already fulfilled the average daily range, and the time is slipping through our fingers. Right, so what are the odds that there's more runway? Well, the longer we spend inside here, the longer we spend not going up, the less likely it becomes, right? The more we go towards the banker's close, which is in 2 hours from now, we have to be aware that at that moment, volatility just gets sucked out of the market, and then you're stuck holding the bag, right? So you need to be done, whatever it is you're trying to do, win, lose, or draw, by lunchtime New York. Otherwise, those trades will, be on your book until next week. Right, so we don't want to be carrying trades into the weekend. Not in this environment, with what's been happening in the Middle East. So be aware, of your surroundings. Keep your head on the swivel. Trade what you see. All right, there it is. Boom, boom. It's bounced me out of here, baby. I'm just thinking out loud. All right, testing support. Support here was resistance on the left. If I remove the deal map, it's a little bit easier to see. It's a little bit easier to see what's happening. So this might actually be somewhere closer to here. All right, something like this.
Fitz Goolsby says the golden path is more difficult this year now.
We should get a job like these people, man. All right, this is our box right there. I'll just move this one out of the way. Let's keep it so we have that reference, but this is that current move right now. We can put this over here if we expect a move lower, right? And this is the idea. Now remember, if we break the bottom of box number 2, it's the cheapest place to lose box number 1, right? If you don't close box number 1 in this area there, you're now committing yourself to boxes 3 and 4 to find the average of all this stuff to get out of here somewhere near the middle.
Fed
Right.
Scoresby says we have done great on the employment mandate, but we have not succeeded on the inflation mandate.
So you're trying to bounce off of here, or you're expecting a bounce maybe off of here, which was from the past, or we're now, if we must, using these two boxes to repeat and look and bring down your average as the market goes down. All right, so you're spending money to eventually save money. It's counterintuitive.
And Goolsby says it will take longer to get inflation down to the 2% goal.
And these people are geniuses, I tell you.
Fed Goolsby says that if you hold at this level of restrictiveness for too long, you will have to start thinking about the impact on jobs.
They're always a few months behind, huh?
Goolsby says the policy trade-offs are harder this year.
Isn't that Bitcoin halving thing happening soon? That's should be fun this weekend. It'll be all over the news, I'm sure. Right, so if we are wrong about this idea of higher high, losing has to happen in this box here. Right, because there's no way I'm going to commit 4 hours on a Friday to save a week of work if I can avoid it. Wish I had a crystal ball. It'd probably get broken in this house. Never mind. Never mind, I said that. I don't want a crystal ball. A little bit of a bounce, huh? Let's pretend we're getting ready for a break to the top. All right, so we've passed the bottom of the hour. We're heading now towards the London fix. And so in about 20 minutes, usually, so it's not a for sure, but there's been times when the volatility will increase because those European bankers have a job to do, right? And that must be done before they close the bank. And so they're rebalancing their books in that last hour. Right? And then once the banks in Europe are closed, we in North America are left with the euro and we don't know what to do with it. It's not our money.
Fed Goolsby says it's harder to get to 2% inflation without housing progress.
Right? So without those participants in the afternoon, we're best to not trade, right? Hence the idea of that 2 hour business window, right? You pick the best 2
Goolsby
hours
says we'll get inflation to 2% over a reasonable period of time.
and you do your darndest to avoid the outside of that 2 hours. You don't want to work overtime for free. Well, let's pretend we're having a break to the top side. Bone crushing pain is coming for their shorts.
Goolsby says, I don't know if recent inflation is a sign of overheating.
Couple more. I'm going to pull the plug and call it a day. Turn on the deal map so we see what we just accomplished. There you go, ladies and gents. A day of work. We'll call that a day. Make it a weekend. And I'll see you guys on Monday. Enjoy yourself. Thanks for being here every day. And go check out the YouTube channel. Like, subscribe, and all that good stuff. Enjoy yourselves. Trade safe, everybody. Bye-bye.